Hey everyone, welcome back to CLiK Trading Education. I'm Ifti and this is your weekly breakdown of what actually moved the markets for the week ending the 21st of November 2025. It's been a proper risk-off week, the type where traders either shine or hide under their desks. Let's jump straight in. This week was textbook risk-off. Fiscal uncertainty, softer consumer data and global slowdown concerns pushed traders into safe havens. As you can see here, the FTSE fell about 1.2%, the US dollar index strengthened, and the VIX spiked almost 20%. When volatility picks up, opportunities appear, but so do the traps, and this week had a few of both. To really understand these moves, we look beyond the charts and into credible financial reporting. FT, Reuters, Bloomberg, Wall Street Journal all pointed to the same narrative this week. Risk appetite evaporated. Let's break down why. Starting in the UK, this one set the tone early. According to the Financial Times, the UK public borrowing for October hit £17.4 billion, much higher than expected, and around £10 billion above OBR projections for the year. That raised eyebrows across markets, and probably a few inside the Treasury too. Trader takeaway, the pound weakened across the board, gilt yields rose, FTSE came under pressure, a classic fiscal wobble reaction. The Guardian reported UK retail sales fell 1.1%, much worse than the expected 0.3% drop. That's 3 months of declines and an early warning that UK consumers are tightening wallets as winter approaches. Trader impact, the pound and pound Aussie offered clean short setups. Retail-linked equity struggled. And then the messaging around next week's autumn budget. Both Reuters and the Wall Street Journal called it a messaging fiasco. Mixed signals about tax rises, spending cuts, very unclear guidance, trader impact, expect high volatility next week. GBP pairs will be volatile around budget day, FTSE and gilts could see sharp intraday swings. Basically, keep position sizes sane and stops respectful. Over in the US, Bloomberg reported the University of Michigan Consumer Sentiment Index dropped to one of its lowest readings in over a year. Not ideal when US consumer spending drives 70% of GDP. Impact tech stocks sold off, S&P and Nasdaq corrected, USD strengthened as traders moved into safety. Multiple Fed officials, according to Reuters and WSJ, warned against cutting rates too soon. Fed speakers like Bowman, Kashkari and Bostic delivered a consistent message: inflation isn't done with us yet. Impact on traders, the yen and Swissy trended higher. Microsoft, Amazon, Nvidia all fell. Rate-sensitive assets felt the pressure. Globally, PMI data from S&P Global and Capital Economics showed services activity slowing in the UK and Eurozone, both drifting toward contraction. China ticked slightly up, but Western growth is clearly weakening heading into 2026. Trader impact, Aussie and CAD offered clean macro trend trades. Gold stable, silver weaker, and the USD strength stayed dominant. Crypto didn't just follow the risk-off mood, it amplified it. CoinDesk and Bloomberg Crypto reported over $2.1 billion in liquidations as BTC lost the $90,000 support level. Impact, BTC down 10%, ETH down 11%, stop hunting everywhere. High volatility setups rewarded disciplined traders. Not a week for over-leverage unless you enjoy cardiac events. Here's the CLiK breakdown. Forex, USD strength dominated, GBP pairs highly reactive and Euro continued its drift lower. The indices, Nasdaq weakness, great momentum, short opportunities. FTSE mirrored global risk sentiment. Commodities, gold steady, oil weak on demand concerns. Crypto structured pullbacks work beautifully if you respected volatility. Looking ahead, the 26th of November, UK autumn budget will be the main event. Expect volatility across pound pairs, the FTSE and gilts. US Thanksgiving week, low liquidity through exaggerated moves. Trade smaller, be patient. Global data, Eurozone PMI finals, China production numbers and OPEC commentary. This week has been a perfect case study in how macro narrative drives price action. When fiscal uncertainty, weak sentiment and slowing global growth line up, the technicals simply follow the story. Remember, trade with process, not prediction. Next week's budget will bring some real opportunity, but only if you manage your risk like a pro. If you found this useful, hit subscribe, join our CLiK community, and stay tuned for our live budget breakdown next week. Trade well, stay disciplined, and I'll see you in the next session.